Hello. Welcome to our next chapter, that is taxation of investment fund. This is not even a chapter, this is a tiny concept. Don't consider this as a chapter only. So, taxation of investment fund, what happens is there is one investment fund and there are unit holders, that is people who have invested in this investment fund. Now, this investment fund gives something to the unit holder. The problem comes that, boss, what will be taxable to whom? So, the investment funds, all incomes will be exempt. That is, whatever income that the investment fund itself earns, all of that income will be exempt. All income is exempt. Over here, red is exempt. So all income will be exempt except PGBP. Except PGBP, what does this mean? That PGBP will be taxable to the investment fund, while all other income that the investment fund earns will become exempt. Now this PGBP, if it is a company or a firm, it will be, of course, your rates will be 30% or 25% based on your turnover. For others, it will be your maximum marginal rate. That is, PGBP will be taxable at your maximum marginal rate. That is your MMR. And for unit holders, of course, to see, since for investment fund only PGBP is taxable, rest everything becomes exempt. That means all this income goes from investment fund to the unit holder. Correct. So instead of taxing the investment fund, we will be taxing the unit holder. So therefore, if you see, all income will be taxable except PGBP, because PGBP has already been taxed to the investment fund. So income that investment fund earns, that it transfers to the unit holder. Out of that, the PGBP portion investment fund will pay tax, and for all other income, your unit holder will be the person who will be liable to pay tax. TDS will be at the rate of 10% if income is distributed by investment fund. If investment fund is giving income, if from investment fund it is giving to your unit holders, then, for example, if the income was 100 rupees, your investment fund will only transfer 90 rupees, and 10 rupees will be deducted as TDS. 10 rupees will be deducted as tax, that is your TDS. Next is, if income earned by fund but not distributed to unit holder, that means it has kept it with himself, it has not transferred it to the unit holders. In such a case, it will be deemed to be credited to unit holders and it will be taxable to unit holders. Do you understand that? Even though unit holders have not received any money, because this income has not been transferred to the unit holders, still it will be deemed to be credited to unit holder and it will be taxable to unit holder even if it is not distributed. Next, income taxable to unit holder in the same proportion and nature as earned by the fund. For example, the fund earned 70% of income through PGBP and rest 30% was others. So now, since this 70% is already been taxed by the firm, whatever amount that the unit holder receives, only 30% of that amount will be taxable to the unit holder, because we said that, boss, it is the same proportion. It is the same proportion that the investment fund has earned the money, the unit holder has also earned at the same proportion. So therefore, it is the same proportion and nature as earned by the fund. Any PGBP loss of the investment fund will be carried forward or set off by investment fund only. That means it cannot be passed. It cannot be passed to the unit holder. Why? Because we have always been saying that, boss, my PGBP will be taxable to the investment fund. So my PGBP loss will also be carried forward or set off by investment fund only. Investment fund only. Okay. So therefore, PGBP loss will also be set off carry forward by investment fund. It cannot be transferred to unit holders. However, your other losses, that is other losses means other than PGBP loss, other losses can be passed through to unit holder. You can pass it through to unit holder only if your unit was held for at least 12 months. That means the unit holder will be allowed to absorb this loss only if this unit was held for at least 12 months, which means 12 months or more. Otherwise, other losses will also not be given to unit holders. And investment fund to provide breakup regarding nature and proportion of income to unit holders up to 30th June. Because we said that, boss, income will be taxable to unit holder in the same proportion and nature as earned by the fund. But if the unit holder doesn't know only that at what proportion the investment fund has earned his income, how will he pay his taxes? Therefore, they have given a date that, boss, by 30th June, the investment fund has to give all of these details so that my unit holders can file their returns and taxes. Clear? So with this, we are done with this part. Our next part will be your setup and carry forward. So it is a very small thing. I have put it in a table format. So I'll see you in the next video.